welcome today to another in our ongoing series of online discussions, our Focus KSA series. We're really pleased today to have with us Sharif Atta, who is partner and portfolio manager for SQM Investment. Sharif is extremely familiar with the Middle East, and we asked him to join us today to talk about the planned opening of the Saudi stock market. It goes by various names, Tadawul, Tazi. If we don't say stock market, I'll probably just say Tazi. Sharif, however you refer to it. But after many years of planning, a lot of examination and study, the Saudi stock market is intended to open probably first half of 2015. Recent speculation is that it'll be right after April when Saudi companies report their earnings. This is quite a big event in the investment community. Saudi stock market is valued over $500 billion. It's got 169 listed stocks. It's pretty fluid. That valuation is over half of all the total in the GCC countries. A lot of people have been waiting a long time, actually, for this opportunity. Some of the major investors, Mark Mobius and John Burbank and people like Sharif Atta, our guest, have been tracking this. So we're really pleased today to have Sharif join us. And Sharif, if we could begin, can you tell us a little bit about SQM and some of the things you're doing in the region?
Yeah. So SQM is just a U.S.-based investment management firm, and we focus on frontier markets. And we've been investing in Saudi for quite a while now.
And currently, how do you access the market?
Well, currently we access Saudi through P-notes. Basically, the only way that foreign investors can access the Tadawul at this moment.
Through
P-note, participatory notes. So synthetic. Essentially, it's synthetics. We can't. You're not allowed. Current rules don't allow foreigners to buy cash equities in Saudi.
All right, and some of the proposed changes are interesting, and I think they probably studied previous openings like the Shanghai stock markets, comparable markets in UAE and Doha. In the new regime, let's assume this comes to pass in April, May, or sometime in 2015. What will this mean for SQM's investment in Saudi?
Well, I mean, I think for existing investors in Saudi, it might not mean as much as it would for investors who are currently unable to invest in Saudi because of the current rules. So I mean that by, for example, for SQM. So say SQM tomorrow is allowed to invest in cash equities in Saudi. If we were to sell all of our existing positions in P-notes and convert those to cash equities, we would have to book, we'd take realized gains on our existing portfolio, which would have tax implications for a lot of our investors. So even if we were allowed to invest in cash equities tomorrow, I think we would probably transition towards investing directly into the market, but it would be a transition. It wouldn't happen overnight for someone like us. And I think that's probably the case for a lot of existing investors in Saudi, except for those who might, there might be some investors who, they're invested in P-notes today, but they're only doing that because that's the only way they access the market. And as soon as the market becomes accessible via cash equities, they'll invest directly tomorrow. But for investors like us who don't mind owning P-notes, and for a lot of other funds who are similar to us, I suspect that transition will be more gradual. There are some investors who are interested in Saudi, who because of rules and their own internal prospectuses and their own investor base that cannot invest in P-notes, and who, as a result, have not invested in Saudi because of the way the market is currently accessible. For those investors, this will be a very big change and should allow them to access a market that they probably are interested in. Again, if it would be for those investors who do qualify as who meet the QFI standards.
Well, that's interesting. So those of you who are already, and I know SQM has been, very early on emerging markets for some time across the globe, and certainly in Saudi Arabia. So you're saying that there wouldn't be much change, and the change that would come would be a transition slowly implemented. Yeah. Is moving to cash equities, is that more efficient for investors? Is it a whole different proposition? Or?
I mean, it should be. The issue with P notes is typically two things. One is that the transaction costs are a little bit higher. So trading cash equities in Saudi should be cheaper. The commissions would be lower, most likely. The second issue is counterparty risk. So when you buy a P note through a investment bank, you are unintentionally taking their own balance sheet risk. Because how a P note would work is an investment bank, X buys shares in the underlying stock, creates a synthetic security and they turn around and sell that to you. So the actual shares are held in account by that investment bank, who in turn issues you a security. So the investment bank is inherently in between you and the actual security. So you're taking some risk. That risk is usually, it's very negligible. It's small, and it's not really, we don't really see it as being something that we're, very concerned about. But obviously, it's an additional risk, and some people are either uncomfortable with that, and I think a lot of cases they just cannot invest in securities like that. So some mutual funds, for example, their bylaws would just not allow them to invest in a P note.
Interesting.
And also another thing that you do give up as well is you give up voting rights, because you don't own the underlying shares, so you don't have voting rights. Right. So the only way you can vote is with your feet, right? You can, if you're unhappy with decisions that are being made, you have to sell. You can't really, you can't vote proxies.
And it sounds as if, I may be mistaken, it sounds as if as it's structured, at least initially, that voting rights will be limited anyway, simply because of the cap on the percentage of a stock in any single stock.
Yeah, exactly.
That's fascinating, Sharif. That's interesting background. Now, can you talk a little bit about the market itself? Now, it is pretty liquid. It's interesting enough. It's not energy heavy. I'd say it's probably a third of financial services, a third of infrastructure and materials, and a good bit of telecom and other. Tell me a little bit about the Saudi market and where you're involved in the Saudi market.
So, I mean, it's a big market. It's bigger than South Africa. It's similar. It's roughly the size of, or even bigger than Turkey. It's so it can, in the global scheme of markets, it's a big market. It's interesting in that it's a big market that people are not very familiar with because of one is the accessibility of the market, and the second thing is because of the accessibility of the market, it's not in any global index. So it's not in the emerging market index, it's not in ACWI or anything like that. So as a result, it kind of falls off the map. Despite the fact that it is a big market, and despite the fact that it does trade quite a bit. I think average daily traded value for the last couple of months is probably $2 or $3 billion a day. So it trades quite a lot. It is a market that is, those who are new to Saudi would maybe be surprised that oil companies are not represented on the market at all. The state oil company Aramco is unlisted, and so the market itself, the earnings of the market itself, are not really derived from oil. There are large petrochemical companies listed, so that's a pretty big weight in the overall market. I don't know what the exact percentage is, but probably roughly a third or something like that makes sense. And then you do have a third financials, as you said, and then a third of everything else. Everything else is telcos, and there are a lot of consumer companies and some healthcare companies, and so it is it is a pretty diverse market, and there are a lot of interesting companies, and but it's not oil heavy or anything like that.
So can you maybe project a little bit on how the stock market might change? So at the moment, it's very heavily retail dominated. About 80% of daily turnover is by individual retail investors. It's had a nice, consistent return. It's not overvalued, as I understand. What's your take on how it will change as major institutional investors come in?
Yeah. Well, I mean, I'm not a market historian or anything like that, so I wouldn't really be able to say, based on previous examples of markets opening, what tends to happen. But I think, most people would expect that as the market matures and as, more and more foreign investors come into the market, that the percentage of holdings by institutional investors would increase. Hopefully they would, you would expect, I don't know if this will actually happen, but hopefully you would expect that the market might be less volatile as a result. Not that it's an extremely volatile market today, but, you would expect that greater proportion of long-term institutional investors might, reduce the volatility of the market. You might expect that the market would become more efficient. You might expect that it might not actually end up happening, because who's to say that institutional investors are extremely efficient investors themselves, but you would expect that the market would become more efficient. You would expect the market to grow. There would be, theoretically more demand for Saudi shares in general. So, new IPOs, you might see more appetite for new IPOs. Again, these are all things that you would hope to expect, but, who knows what would actually end up happening in this kind of this situation. I don't necessarily think that, the market's going to open and all of a sudden you're just going to see a flood of money coming in and the market's just going to take off. I wouldn't, bank on that happening. But I think this is obviously overall would be a very important step in the right direction for the market and for the economy. For an economy which is, overall, which is opening up and is, and for a country which is, opening up at a pace which is, by Saudi standards, relatively fast, but maybe for foreign investors, it might not be fast enough. But I think the market is opening up, the economy is opening up, and this is just another step in that direction.
I have a couple of questions, but let me go along the lines of that thought. In advance of being added to the MSCI index, the UAE and Qatar, the prices were run up pretty well, and then once it acceded into it, was included, they dropped. The thinking is that by 2017, Saudi currently is obviously a frontier market, along with a number of other Middle East countries, Lebanon, Oman, Palestine, even.
I'm not even sure Saudi is included in the frontier index right now because of the keynote situation. I'm not 100% sure.
So obviously, and you understand this better than I, once you're included in the MSCI index, people have to reposition and rebalance their portfolios, and it requires, it sort of instigates a natural inflow of investment. Would you guesstimate a number on that for a market this size? And I won't hold you to it. Let me give me an up or down. The numbers you hear are 40 billion to 50 billion.
Yeah, I've heard similar sort of numbers. So I think we're sort of index agnostic, so we don't really pay too much attention to indices or anything like that. But the numbers that have been kind of floating around out there are kind of, if Saudi were to open, it would be somewhere in the neighborhood of 2 or 3 or 4% of the MSCI Emerging Market Index, which would imply inflows of the numbers that you kind of mentioned, 25, 30, 40, $50 billion or something. So those numbers don't sound pretty accurate. I think if when the market opened, that's upon that's a lot. There's a lot of ifs, obviously, because of how MSCI calculates index weighting and all that kind of thing. So there's a lot of uncertainty as to what the actual number would be. But if Saudi were to be included in the MSCI EM index, then there would be a lot of money that would be forced into Saudi. So that would, you would think that would have as you saw with UAE and Qatar, that would have obviously a positive market implications.
So you're a keen market observer. I'm sure you've noticed that between June 2014 and January 2015, we had a significant dip in oil prices. When you look at this market, how does it sustain that drop? Obviously, the recently announced 2015 budget was an expansionary budget. Despite this, they'll be doing some significant deficit spending. They certainly have tremendous capital reserves. What's your take on oil prices as it bears on the Saudi market?
Well, we're not, we invest in individual companies, and that's kind of our bread and butter. So I don't really have a strong view on which way oil prices are going to go or anything like that. I think right now, back of the envelope, it seems like the Saudi market is looking through the current oil price and seeing it as more of a temporary phenomenon. A temporary phenomenon that the government can easily withstand, given the financial reserves that you mentioned that they have, and given the break-even point for oil, which is relative to countries like Venezuela and Russia and Iran, is a very low break-even level for the oil price that the Saudi government needs to balance its budget. So they will run a deficit this year with oil prices where they are today. If oil prices stay at current levels indefinitely, then you would think, who knows, but you would think that the Saudi budget might have to be rationed down even further, which would create some headwinds for the economy. But I think currently it seems like, most oil experts, and I use that term with a grain of salt because, I don't think very many people predicted what would happen over the last 6 months, but it seems like, most oil observers would say that the current price is not sustainable for a long period of time, and it should, recover, maybe not back to where it was last summer, but to a higher level than it currently is today. And if that were to be the case, if that ends up being what happens, then I think that the Saudi market is correct for looking through the current price as being a temporary phenomenon and not something that's here to stay forever. And again, the government has huge financial buffers, and the oil price decline that we saw over the last 6 months has been, it's not unprecedented, but it's been very dramatic. But obviously, the Saudi government, the balance sheet that the Saudi government has today is probably never been stronger.
Yes, and they have a proven history in 2008, 2009 of counter-cyclical fiscal policy. And I couldn't agree more. We're looking at the oil market every day, and right now on the table you have prediction all the way from $20 a barrel. We haven't gotten anywhere near the floor to 80 by the end of the year. So I guess you can pick and choose, but I suppose smart investors like you just watch closely and adapt. Sharif, thank you very much.